Hey there, welcome to another episode of The Block Crunch, the podcast where we talk to investors, entrepreneurs, and builders in the crypto space for 20 minutes every week. I'm your host, Jason Choi. And if you haven't already, please do rate and subscribe on Apple Podcasts, Spotify, and Stitcher. And also recently, we launched our YouTube channel where I'll be posting some of our video-based interviews as well as audio files of the podcast we've done so far. So if you're more of a video person or you want to see what I look like or what my interviewees look like, do go on YouTube and search for Block Crunch Podcast and be a subscriber today. And this week, I am incredibly excited to be chatting with Meltem Demirors, the former Director of Development at leading cryptocurrency investment fund Digital Currency Group, or DCG. But calling DCG an investment fund would be too limiting because they are actually a company that is dedicated to building out the entire blockchain ecosystem. And besides investing, DCG owns and operates CoinDesk, which is one of the most popular media and news platforms for crypto. And they also operate Genesis Trading, one of the leading Bitcoin brokerage firms, as well as Grayscale Investment, the largest digital currency asset management firm. And so far, DCG has made over 100 investments in some of the most prominent crypto companies. Now, Meltem has since left DCG to start her own fund, Athena Capital, and she has also advised the World Economic Forum, as well as MIT and Oxford, on blockchain matters. So suffice to say, Meltem is definitely one of the most recognized voices in crypto today, so I am incredibly grateful that she made the time to chat with us and share with us her thoughts on the future of the crypto ecosystem, what she thinks is wrong with ICOs that we are seeing today, as well as what she sees as the biggest opportunities in the crypto space in the coming years. So without further ado, let's buckle up and dive right in.
Worldwide phenomenon.
Hey everybody, welcome to another episode of the Block Crunch. So Meltem, welcome to the show.
Hey Jason, how's it going?
It's going great. So I would love to get started by having you kind of tell us a little bit about who you are, because your experience in this space is truly, truly intensive.
It's funny that you say that because I've been here for 4 years, and I feel like in most industries, 4 years is nothing. Somehow in crypto and blockchain, it's a lifetime. I started getting into Bitcoin in around 2013. I was working in oil and gas at the time and just thought it was interesting, kind of nerdy and fun. I was a mathematician by training, and so when I started digging into Bitcoin, I thought some of the math around it was interesting. And then I ended up going to grad school at MIT. And at that time at MIT, there was a lot of really interesting activity happening around campus in regards to Bitcoin. And really at that time, it was just Bitcoin that people were talking about. And there were students who were setting up faucets. There were students mining in their dorm rooms. And I just started getting more and more into Bitcoin. And then in 2015, as I was leaving grad school, I spent some time working on startups, working in venture, and I really started to get disillusioned by the venture model because it's very unfavorable to the entrepreneur. And I think particularly with fintech, we saw that venture models in a lot of cases really couldn't support companies in the way that they needed to be supported, especially when companies were creating new categories. And so I met Barry Silbert, who was creating Digital Currency Group at the time. And he said, hey, we've got a lot going on. Do you want to come work on this? So went over to Digital Currency Group, helped set up that company and prepare it for our public launch in October of 2015, which was a really interesting experience. Was with DCG through the growth of DCG from having 30 portfolio companies to having 120 portfolio companies, having 2 subsidiaries to now having 4. And so it was a really interesting journey. And then in January of this year, I kind of looked around and I said, the world's changed a lot. It's been a really fun and interesting ride, but I wanted to try a new and different model with ICOs emerging, with all these crypto funds emerging. I really wanted to focus more on the underlying infrastructure and network implementation layer of the crypto asset ecosystem and really get back to my roots in institutional finance. And so now I am investing through my own firm, Athena Capital. I'm also advising, and then I'm working on a few interesting projects on the infrastructure side that I'll be hopefully talking about more over the next few months.
Got it.
So that's me.
Awesome.
Lot there.
Yeah, that was truly, truly a lot of experience. I think more than most people in this space for sure. And I would like to kind of focus the rest of today's conversation on building the blockchain ecosystem because you have been at the heart of it. So let's start with DCG first. As part of your work at DCG, you worked with companies, investors, and corporate partners. So I'm curious, besides financial institutions and banks, what types of companies are most interested in blockchain technology now and why?
Yeah, this is such an interesting question because it's evolved so much. So in 2015, it was definitely primarily focused on financial institutions. And I think what most people don't appreciate is it's now, March 2018. In 2015, even in October of 2015, so this is less than 3 years ago, no one talked about blockchain. Blockchain wasn't necessarily a word that people really used. It was really all about Bitcoin. And so if you think about the types of people who are attracted to or curious about the idea of Bitcoin, it was really financial institutions, payments companies, people who are interacting with transaction processing systems. And then in late 2015, and I hope someone writes a book about this, someone somewhere got into the marketing of Bitcoin and realized that was never going to work for most people. And they invented this idea of blockchain, which is this really esoteric, kind of frankly silly concept of a distributed database. And look, there are a lot of blockchain companies that are doing interesting things. There are also, frankly, a lot of really unintelligent ideas that came out of the blockchain boom of 2016. And now I think that we've moved past this phase of blockchain for, ripping the back end out of banks. Everyone's starting to think about distributed compute and Web 3.0 architecture. I think those are also somewhat esoteric terms, and you'll find someone who's really into specificity. So I think a lot of what people are excited about is what is the impact of cryptocurrencies, blockchain protocols on the underlying architecture and infrastructure of web applications? And how do we use these new consensus mechanisms and these new ways of economically incentivizing actors in a network to construct and create new networks in enterprise computing, in healthcare, I still think the healthcare use case is a bit iffy, identity systems, governance systems. And so I think a lot of the focus has shifted from blockchain for banks to distributed networking for all sorts of applications.
Got it. And as a follow-up to that question, what do these companies or organizations need help with the most when exploring blockchain as a solution for their problems, be it in banking or, like you said, in other network solutions?
I think number one is just separating signal from noise. There are a lot of people who claim they are blockchain experts, that they have all of this expertise. And I think for companies, it's really hard to parse through what's real and what isn't, particularly with the explosion of crypto conferences and blockchain conference happening all the time. And so a lot of what corporates ask for my help with is, hey, we have these 3 or 4 very specific strategies we want to explore. Who do you think we should be talking to? I think the second is really thinking about scenario modeling and really starting to understand how they can think about what various scenarios of the application of cryptocurrency and blockchain technology might make sense in the context of their organization. And then also helping them identify what type of signals might indicate that these networks are ready for more mainstream adoption. And then helping them develop strategies and internal organization so that when those signals appear, they're prepared to quickly adopt and they have some of that internal competency so that they're not caught unaware and playing catch up. And so I think right now, really, it's in an exploratory phase. And a lot of what I've been trying to do for the last 4 years is really bring together some of these corporates, some of the larger venture firms who are focused more on growth equity and have operating teams and platform teams that help their companies with real operational and strategic issues, and startups and entrepreneurs all to the table together to have a dialogue, not in the context of raising money, not in the context of, hey, pay me money to come to my conference, not in the context of, hey, there's pressure here to get something done, but really to talk about what the frictions are that are preventing this technology technology from being adopted more widely. There are also just some natural constraints in terms of development, right? This is all still fairly experimental. We're figuring it out as we go. And so I think really being a connector that brings together these different parts of the ecosystem and helps translate requirements that enterprises have into what startups are doing, into how venture firms are thinking about investing, and helping these groups work together to articulate a new vision for what the future might look like, I think is really constructive. And so really, I think of myself more like an architect, where I create containers where people can come together to have those dialogues. And then now what I'm really thinking about is how do I inject capital and raw infrastructure, really scaffolding into those dialogues so that we can move that conversation forward more quickly.
And tying this point about infrastructure back to what you brought up earlier, when you were at DCG, DCG acquired Genesis, which is a trading firm for digital currencies, and also established Grayscale, which is a trusted authority in crypto investing, and then acquired CoinDesk as well, which is an independent news source of blockchain news. So why are having these subsidiaries important, and what gaps did they fill for DCG?
Sure. So I think the vision for DCG was always around creating a platform to help the ecosystem grow. And if you look at the firm, really the competency of most of the principles at the firm lies in traditional finance and law. And so I think the focus really was on creating a bridge, if you will, between the crypto asset ecosystem and the institutional finance ecosystem. And so if you look at Genesis, for example, they're one of the only, if not still the only firms that's FINRA, SEC, New York DFS licensed, which is important for the types of counterparties they can trade with. If you look at Grayscale, they've taken a lot of steps to work with regulators to create products that are accessible yet comply with sort of the highest standards of investment advisors and other companies who may sell or buy financial products. And so I think really the focus has always been, let's create this multi-pronged investment strategy where we own the services businesses and invest in the technology businesses and the digital currencies themselves. And I think that model is certainly very suited to the type of firm that DCG is. And I think it was really interesting just observing how all of the different value that other parts of the firm brought to the table could be combined together to make the sum of the parts greater than the whole. And a lot of that was really me behind the scenes working to connect all of the dots. I think going forward, what I'm more excited about is it's not just about financial infrastructure or financial firms or financial markets. It's really, to me, about developing networks and architecting those networks together with the key stakeholders. And so it's really about a slightly different set of competencies focused more on distributed computing, network development, which I think are skills that have been around for a long time, and just bringing those practices into the crypto ecosystem, as well as principles around user design, marketing communications, usability, security, resilience, etc.
And speaking of the future of this ecosystem, I'm interested for you as a person who has been in this space since the very beginning and now investing in this space with Athena Capital. It seems like every day there is a new ICO and everyone is launching a new protocol or a new network.
But I haven't told you about my ICO yet.
Yeah, would love to hear about that if you're open to sharing.
No. I was joking.
Okay. For a minute, I wasn't sure because everybody is launching their own ICO. And so, in your opinion, what types of blockchain ventures are people not building? What are ICOs that people are not launching but should be?
Okay. I don't think ICOs necessarily solve a problem. I think ICOs are very interesting. Look, I'm very excited about the idea of tokens and cryptocurrencies. I think they're fascinating, particularly from a network implementation and adoption perspective. But I don't think that ICOs in their current iteration really make that much sense. The problem with ICOs is we're creating a ton of supply, and a market that has only supply is a very one-sided game. And my concern is there's no natural demand for these tokens or these cryptocurrencies. And so people are doing everything in their power to curate artificial demand by creating development funds, by paying people to list their coin or use their coin in different ways because they have a bunch of financial capital. But the problem is that right now there's really no natural demand for these tokens. And as an economist, I think about supply and demand. Like everyone who took Econ 101, that chart where supply and demand intersect, and that's a determinant of price, is actually really relevant here. And people try to call it quote unquote tokenomics, which is a phrase that makes me want to puke because it's just absolutely unnecessary. It's supply and demand, right? And the challenge is that everyone on the ICO side is spending a lot of time and energy engineering their supply curve with lockups and releases and airdrops and all these funny schedules. But people aren't really thinking through the demand side in an elegant way. And I think this is what concerns me with ICOs is we have tons of supply being created, but there is no natural demand and there's no infrastructure to distribute these tokens widely into the networks. And there is no infrastructure to enable people to curate demand on top of these products. And so I think ICOs in their current iteration are really not that constructive. I think they actually may take us a few steps backward, which is okay, because we're going to figure some stuff out in the process. But at the moment, I would say I'm really more excited about projects that are focusing on some of the underlying usability challenges related with cryptocurrencies. So key management solutions, custodial solutions, in the true sense that I could have secure and hardened enclaves on a computing device where I can actually store my private keys. So I don't have to, whip out a ledger or a Trezor every time I want to trade because that's highly impractical. It's really thinking about how to make the stuff we have today that's implemented today usable. To me, there's still a lot of opportunities around Bitcoin and Ethereum and all of these other cryptocurrencies. And I love that there are so many people working on really futuristic concepts, but they're intellectual exercises. And most of these networks aren't implemented. And so when I see them being valued at billions of dollars, I just start to get concerned that we're focusing on the wrong thing, which is capital formation. And everyone views, the sale and the end of an ICO as sort of a goal. That's not the goal. The goal is 20 or 30 years away. The goal is having a protocol where there's natural demand for the token you just created and marketed. And so that's where I'm focusing on is how do we actually prove that there is demand for these products? And I don't think we're quite there yet.
Mm-hmm. And it's funny that you brought up the point about ledgers and Trezors because I just bought mine and I do agree it's very impractical, especially for, I guess, retail investors who are just trying to learn about this space. And that ties back to a question that I had. So with so much of the demand for these ICOs or new tokens coming from everyday retail investors, how do you see the role of institutional investment funds evolve?
So this is an interesting question as well. I think one of the narratives I hear often is, what crypto really needs to grow is for institutional investors to enter into the asset class. And I used to share in that mentality, but recently I've been thinking about it and I just don't believe that's true at all. I think that there's a difference. People have different perceptions of what growth means. For some people, growth means financial growth. It means overall increase in the market capitalization of these tokens and protocols, and it means increase in price. And I think you have to sort of untangle who's saying these things to really understand what their underlying motivations are. So if I'm a firm and I own a lot of Bitcoin, or if I'm an investor and I've been invested in Bitcoin for a long time, my natural motivation in saying these things is to encourage others to also participate so the value of my tokens goes up. Right. And so I think understanding intent is really important when people say these types of things. But I don't think the institutional funds are ready. And it's not because there aren't custodial solutions. And it's not because there aren't, better hardware wallets. I don't think it's really any of those factors. What I think the core challenge is in crypto land, owning cryptocurrencies is a fundamentally different model than owning any other type of asset, because cryptocurrencies are traded 24/7, they're traded globally, and most importantly, they require active management. Meaning, if I own Bitcoin, I'm constantly watching if Bitcoin forks, how do I get my Bitcoin from the new fork? How do I make sure that I'm participating in any events that require upgrades? For example, the shift over to SegWit, how am I making sure that the wallets I'm using are leveraging SegWit so that I can reduce transaction costs? I think especially with all of these other tokens and protocols, especially proof of stake, where people will be required to stake their tokens to retain the value of the tokens they hold, your average institutional firm is not going to set up nodes in their office and participate in staking. And so I think just the fundamentally different model of how crypto assets work doesn't necessarily help them fit cleanly into the existing institutional investing box, which is why I think products and services like ETFs and ETPs and ETNs are really important. So those are exchange-traded funds, exchange-traded products, and exchange-traded notes. I think these are all really important ways that we can productize some of the assets in crypto and help people manage them in a way that's more consistent with how they've traditionally managed financial products that they have exposure to. But I think really the challenges are around shifting the mindset of institutional investors and introducing a new model for how custody and asset management and trading should work, which will require a new skill set. And so I think we're still, quite a ways out from banks and institutions and large firms adopting cryptocurrencies as a new asset class, because it requires a tremendous organizational shift, but also a mindset shift in how these firms operate. And so to me, the barrier isn't, hey, we just need better technology and better stuff. It's, hey, we need to actually help people categorically understand what this asset is and how it fits into their existing portfolio management structure.
Mm-hmm. And we can't talk about the ecosystem without talking about regulation and its relationship with the entire space. And I remember that you once tweeted that the most vulnerable link in the crypto market is the exchange of fiat into and out of crypto. And it's the one place where governments and regulators can easily constrain growth by cutting off access. And I'm very curious, how do you see this playing out in the coming, say, 5 to 10 years? Should investors be worried?
Yes. Yes and no. So again, I feel like the fun thing about the crypto space is my mind is constantly changing, evolving as I learn more. And sometimes I'll say things, and then 2 weeks later, after talking to people, I realize that I was totally wrong. So look, on the regulation question, there's kind of two ways you could play this. One is I do think regulators play a really important role in providing a stable paradigm in which people can build. And I think the idea of safe harbors, which were created sort of during the time the internet was coming to fruition, is an interesting one that removes some of the risk on entrepreneurs who are experimenting with new business models and new technologies. But I do think there's this other underlying theme in the crypto ecosystem. And I was actually having conversation with someone about this. And here's kind of the way I view it. One, we are operating in a world where financial regulation has not changed in decades. In the case of some laws, nearly a century. And I feel like in the crypto ecosystem, we've done this thing where we've said, hey, let's take what we do and we're going to cram it into the existing boxes you've given us, Mr. Regulator. And we're going to take everything and we're going to bastardize it and cram it into these existing boxes. And I think for many of us who are excited about cryptocurrencies, and I think much of what gets people excited about Bitcoin and blockchain and this technology and tokens and crypto assets is this idea that we can do something new and do something different. And so I think there's this whole shift that needs to happen where instead of saying, hey, we're going to take everything we're doing and cram it into this one box that's existed for a long time, we want to start to say, look, we recognize this box is over here and what we're doing is new. We need to create a new box of regulation for this new asset, because at the end of the day, if Bitcoin becomes a truly global and widely used currency, we can't have 54 different jurisdictions in the US under which it's regulated, and then 150 different ones overseas and around the world where there's all slight differences and nuances in how the asset's treated. It will make the cost of building infrastructure so impossibly high. And so I think the challenge for us in the ecosystem is, how do we create a channel or a container of some sort where we can work hand in hand with regulators to say, look, we recognize why this rulemaking exists and we recognize its intent, but in the context of crypto assets, here's the model we think works in preserving the intent of these rules and regulations without stifling innovation. Does that make sense?
Totally makes sense. And on top of all the amazing things that you've done, you also wrote a series called Women in Blockchain. So I would like to give you a chance to give a shout out to any of the amazing women you have interviewed. And what can people in this growing ecosystem do to make sure that going forward, there's gender equality as we scale?
Yeah, absolutely. And you can tell I'm in New York today with all of the sirens. This is a very New York podcast. Since you're uptown, Jason, you'll probably hear it in like 2 minutes. So, number one, I renamed the blog to the Leaders series, just to focus more on the work rather than gender. And this is sort of an ongoing dialogue. So look, I think at the end of the day, people are going to build what they're going to build. People are going to do what they're going to do. And it's a meritocracy. The goal of my blog when I started it was really just to highlight people who I didn't think were talked about much in the crypto ecosystem, but who I thought were doing really, really interesting and amazing things within their organizations, whether they be journalists, whether they work at NGOs or think tanks, whether they work in startups, whether they work at large corporations. And it was really to also enable people to share their stories. There are all these amazing stories out there about how people got into crypto and what they've been doing in the space. And so it was really just to create a space to share some of those stories. And for me, the most rewarding part was also just getting to know the women I wrote about better. So that's been really fun, is just getting to know everyone and interacting with them. And then the second piece is, it's been really rewarding to be out in the community, to go to meetups, to go to conferences, to even be on Twitter and to have people say to me, hey, I read one of the blogs you did on this person and it really inspired me to do X. To me, that's always proof that I should keep shouting into the abyss. I keep doing it, right? It's why we create content. And so some of the people I've written about recently that I think are really just fascinating, Lee Kewen, who left Newsweek and just joined CoinDesk. She's a reporter. Her story is really amazing. She got into Bitcoin because she was researching sex workers, which I think is just such a fascinating story. And she learned about Bitcoin from Israeli Defense Forces, which is just wild. So her story is really, really fascinating. One of the early posts I did was on Allie Cliff Jennings, who's the CEO of Filament. And her story is absolutely fascinating. She's been at the helm of so many startups, is just so deeply knowledgeable in cryptocurrencies and blockchain technology and mesh networking. She's just a fascinating person, and her company's incredibly interesting as well. And then one of the recent posts I did was on Jessica Raines, who is at the U.S. Postmaster General's office. And she spoke a little bit about the research she's been doing on the government side to really think about how blockchain could impact structures in government. And so it's really been fun getting all of these really different perspectives. And there are going to be many more blog posts. If anyone would like to participate, just shoot me a note on Twitter. I have open DMs or direct messages. Feel free to send me a note and say you'd like to share your story. I'm always looking for more people to write about, more people to meet, and more people to sort of lend the spotlight to.
Awesome. So as our very last question, I'm curious. So is there any resource or advice or book that you would recommend to our listeners that helped you when you were first starting out in this space?
I love books. I love reading. So thanks for the question. This is perfect. So I have actually a list of 5 or 6 books that I recommend to most people that I think are just really helpful in understanding not just the technology underlying Bitcoin and blockchain and cryptocurrencies, but also just the ethos and the mentality of what self-sovereignty means, what governance means, what changes we're trying to facilitate in the world, because I think the ethos at some times is even more important than the technology. The technology is obviously key, but to me there are three sort of key categories of any great product or service. One is the technology or the engineering. Two is the user experience and design and really the product. And then three, which I think is just overlooked and misunderstood in this ecosystem, is the marketing, the communication, the messaging. It's really how we communicate what we're doing to people who are not in this space. And so the books I would really recommend, number one, my personal favorite is anything by Neil Stephenson, who's a science fiction writer, but in particular, Cryptonomicon is a great read. It's all about the idea of digital money, and it's very futuristic. I also love The Diamond Age and Snow Crash. I think those two are also very futuristic and fascinating. The second book is a book called The Self-Sovereign Individual. I forget the author's name, but it's a book that's really all about what it means as an individual to be self-sovereign or to have governance over yourself, what it means to be a private citizen. And I think that's really important, especially in today's age where we're reading about what's happening with Facebook, the predictive policing programs Palantir was running in cities without consent. There's just a lot of stuff happening that people aren't aware of. And so I think this book really helps people think about the type of world they want to live in. I'd say the third book is this book by Tim Wu called The Master Switch. It's a historical analysis of how new communications technology has been decentralized and then re-centralized. And so I think that's a really interesting book to read, and it kind of brings context to what centralization versus decentralization means. The fourth book I'd recommend, also a nerd book, is Continuous Time Finance by Robert Merton, who is a Nobel Prize-winning economist. He was one of my professors at MIT. It's a brilliant book that combines different principles from math, probability, and economics and financial theory together to create a new model for how to price assets in a world where information and market infrastructure is constantly changing. And I think it's just a helpful primer. It's a very long book. I think it's like 800 pages long, but it's a very helpful primer in understanding how to think about assets and pricing and financial models and how to intersect with the real world. And then the fifth book that I would recommend, which is a book that I've just always loved, is the book Siddhartha by Hermann Hesse, which is more of a book about philosophy and existentialism. And so I think combined, you have a little bit of science, you have a little bit of math, you have a little bit of nerd time, you have a bit of philosophy. I think altogether, that's probably the basis of a lot of my personal exploration.
Awesome. Wow, Meltem, thank you very much for that extensive list. And thank you very much for coming on to the show as well.
Yeah, thanks for having me. I look forward to listening to future episodes of the podcast. And for anyone who wants to connect or chat, I'm easy to find on Twitter. I'm Melt_Dem, MELT_DEM. And I'm always excited to chat with people, hear from people, and have people tear my ideas apart.
And back to our listeners, thank you very much for listening to another episode of The Block Crunch. If you haven't already, please follow me on Twitter at Mr. Jason Choi, that's MrJasonChoi, because I share the latest episodes and updates there. If you haven't, please also rate and subscribe on whatever platform you're listening to this on, because it does help us get this out to more people and help spread the crypto virus. Once again, I've been your host, Jason Choi, and I look forward to seeing you at our next episode.